Hey traders, Akil Stokes here, head currency trader at Trade Empowered, and welcome to this week's weekend review video. I have a lot on my agenda this week, but I want to start off by just giving a brief update on how my trading's been going. Now, last week I spent a lot of time talking about the CTS system, and I got a great review about that video, by the way, so I appreciate it. But my original intention was to talk once again about the video I did 2 weeks ago, a major change in my trading, and let you guys know how that actually was. And things have been going good so far. For you guys, if you're new or if it's your first time, you don't really know my style, I'm both a swing trader and a day trader, meaning my swing trading operates mostly on the higher time frames. We're talking 4-hour charts, the hourly chart, and most of the trades I get through there, I share with the syndicate members. And then 3 hours a day, I also do live day trading. So for those that are in the 12-week transformation course coming through my training course, or for those that just have 3 hours open to watch me talk and love watching the markets, I operate mostly on the 15 to 5 minute and the range bar charts. Now, we've talked a lot over the past few months now about the low volatility in the market, and I've really settled my trading style, especially since making this change. I've really settled my trading style in between both day trading and swing trading in kind of an intraday trading standpoint. And what I mean by that is that what I've noticed on the day trades is that, well, on the 5 minute charts, we're just not getting the ranges needed to be profitable. We're seeing a lot of valid setups. We're seeing a lot of valid patterns. We had 2 today on euro dollar. The issue is that, well, targets are only sitting about 10 pips away. And once you take commission and spread into account, and if you front run orders, that's even more, you're not really getting much off of those trades, and it doesn't really make it worth it to take. On the other side, the swing trading, the longer term trading, well, until yesterday, most of these markets have just been consolidating and not really expanding to the areas needed to hit what we're usually accustomed to with targets on our swing trading. So what I've done is I've settled somewhere in the middle on, say, the 60-minute time frames, but I've been looking for, hey, 20 pip, 30 pip moves. And over the last few weeks shooting that video, that's just what I've averaged. After commissions and spreads are taken out of the equation, I think each of my winning trades has been just under 20 pips, looking at about 19 pips total after all that's said and done. So it's been interesting. It's been I don't want to say a difficult adjustment, but a different adjustment, but it's going pretty well. It also, as I wrote in my blog the other day, it also frees up a lot of my time because I don't have to worry as much about managing positions. I'm in and I'm out, unless it's, trade management based on structure or something like that. Now, this week's I've had both my up and downs this week. I'm going to go ahead and show you one of the ups first. This came on Euro Aussie. And I'll actually show you a brief snippet of the video that I put out to syndicate members earlier in the week, and then I'll come back and update you on, well, how it went. For you 12-week transformation members, we did a big Q&A session on breaking down the kill zone, but we know that the market should reverse somewhere in this area. And I know it's not telling you enough, giving you a zone from essentially 44 flat to 49 flat. A 500 pip zone isn't narrowing it down for you, but you just want to understand the concept of what the market can do. That way you're mentally in the right place. Once you understand what the market can do and that you still can be right, then you narrow down the different areas in which you want to probe and attack the market. But we're going to come up here, hit our zone. The market's going to go oversold or overbought. The RSI is going to go overbought above 80 if you look down here. We then get a pullback off of that, a retracement off of that. And right now, we retested that level for a valid double top. So you can see, actually, with this last candle at market, the one I got short on a few minutes ago, this is the one that came up, and actually the previous one, but this is the one that came up and tested our previous, our highest close here, and we did not close above our highest high, giving me a valid double top. If you need RSI divergence, again, you can look at our double top right here. You can look at massive divergence on the RSIs, again, another tool of confirmation. Now, if we go back to the 240 for 1 second. I don't teach this or discuss this a lot, but we also have something called hidden divergence, which you want to Typically, RSI divergence is when you're using that for a counter trend trade opportunity, like a double top, something like that. Hidden divergence is actually going to give us a little clue that we may see trend continuation. And hidden divergence is this. We have our previous structure high right here, right? We have a lower high on the chart. However, with our RSI, look what we have down here. If I zoom this all the way up, we've got a lower high right here on the RSI and a higher high. So again, just a different type of divergence. Hidden divergence is called. You can call it inverted divergence, whatever you want to call it. But the fact is that price action is making lower highs. The RSI is making higher highs. This should be a sign for trend continuation. Now, again, I don't want to say that it is because, we never know. But this should be a hint, a little nudge in your shoulder for a trend continuation sign here. So coming back to my Euro Aussie chart, you can see we had a nice rollover. Now our double top held. We had the news event on Wednesday, I believe it was, and we rolled over. We came right down in the profit, right down into previous structure, I should say, where I took my profits off. Now, again, in the past, I would be shooting for an extension. We know that we've been talking about this pair for a while, and we're in a bearish continuation pattern. In the past, I'd be shooting for an extension down to the 127 or previous structure, looking left on a higher time frame. But again, making the change in your trading, no longer am I trying to, at least for right now, trying to catch those big moves. I'm trying to get a chunk for myself. I'm trying to look for the first structural level that I see, or the first place that I believe the market's going to reverse at. A few videos ago, or maybe not a few, but in one of my videos, if you go back and watch the archives, I did a nice presentation on thinking like the other trader. I'm trying to find that point and then get my money out in my pocket and just reload for the next opportunity. And in fact, we have a bunch of opportunities up in this level as we went over in the live room. I'm not going to go over the whole thing, but if we just briefly take some fibs here, you'll see how things start to line up pretty quickly at that level. So I'm already reloading and looking for my next we could even do something like this, looking for my next potential reversal zone for a short entry. Again, not worried about that right now, but in the back of my head, I know it's there. Now, that was an example of a good trade. You guys like seeing the bad trades as well. I've come to notice that over time. When I show you guys my losing trades, you guys get excited. So here goes a loser I took on Aussie dollar. Now, Aussie dollar, I was waiting for this exact move, what the market did. I was in a bat pattern a while ago, and I got stopped out. We had an X to A to B, B to C, C to D up here. Got stopped out as the market spiked up into the 94.35s. And like always, whenever we see an X leg being broken in the market, well, whenever we see an X leg in general, we know that it's a structural level, key structural level. When we see that leg being broken, we know that we have a higher high, higher close. That automatically triggers in our mind what? Trend continuation in that direction. So instead of sitting back and pouting and getting mad over a losing trade, I asked myself, hey, where's the next opportunity for me to get long at? And we came up here. We had an Aussie news spike. I think this was about a week ago on June 12th. And then we came up here. And what I was looking for was a move back into this level. Again, if you look, I followed this news live. So I actually had a position on at the time. And I had the bat pattern position on at the time, actually. I followed this the news live, and we made an impulsive move all the way down to this level, stopped on a dime, turned around, and exploded up. So in the back of my mind, I was looking at this as a key level in the market. I don't know what was there, but apparently there was a lot of buying pressure right up there that just killed the bears. And being the bears, beating myself. So going down to the hourly, as we approached that level, what did we see there? Boom. Another nice pin bar. The market came down again, and we got the same type of movement. We came right to that level, pushed down, pushed down, pushed down, sucked right up. So I did an aggressive entry, higher high, higher close. That's one of the techniques we teach to enter the market. Did a higher high, higher close in anticipation of the market going up. We came down a little bit on the news event. We put in a double bottom, RSI divergence, nothing major. We all know that there's different levels to how you can enter a trade, going from super aggressive with a limit order to super conservative with a 26.18, and a double bottom lies somewhere in the middle. So I didn't get too frustrated over that. Now, what happened is we eventually broke that double bottom and we just churned out. You can see the market just basically died right at this level. And good old me had my stops right at, where are they at? 28, I believe. 28, 27. I think it was 25. Had my stops right at 93.25. And you can see the market came down and got me. I don't know what happened here, but the market spiked down, came up and got me right afterwards. Boom. This might have been the FOMC actually. Let's see. June, what was this? June 15th, June 18th. Yeah, this was the FOMC statement. Came down, spiked me up, and then basically did what I expected the market to do. So that's one that hurt. Not because it was a losing trade, not because I lost money. Again, I made it up on the Euro Aussie trade later in the week, but because my prediction was right in what the market would do, and I just didn't get a chance to capitalize. That's the one that hurt. And then, as I always do, we teach a lot about, one of the biggest keys to becoming a successful trader is not just taking the trades, but it's getting better. Kaizen philosophy, continuous improvement. How can I get better? So something I do every day is I go back and I review my trades. And well, as I went back to the 4-hour chart, here's what I found. I measured this level. I said, how come the market did not reverse at this level? But how come we died right here? Right at this red line. Let's make this a different color. Right at this sea green line. How come we died right here? And I looked back, took the bottom of this and said, guess what, Akil? What do you tell your traders all the time? Structure leaves clues. We have minor structure here. Not too worried about that level. But look at this. Boom. The B leg of our bat pattern. We got 1, 2 structure points right there. And if I look back, you can just see how many times the market hits this level. So I rushed into a trade. I didn't do my full analysis on it. I rushed into a trade. I was so caught up over this structure zone that I didn't even think to put stops a little lower due to this structure zone. And due to the targets I was shooting for, I could have easily done that and kept a much bigger than 1-to-1 risk reward. So there you have it. Slap myself on the risk. It was a trade that I should have managed better. The execution was right. The entry was right. But I should have looked more into the trade, done more analysis on it, and put my stops in a safer position. So I'm glad I actually lost on this one, and the trade bounced up and won. Why? Because now I feel a little pain from that. Now in the back of my mind, every time I think about it, it's going to be, oh man, you missed blah, 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 many pips. And I'm going to carry that with me towards my next trade. So very important, guys. Learn from your losers. Don't just get frustrated or don't just blame someone else. Just don't say, oh, it's the news event's fault that I lost. Nothing we can do about that. Nothing we can do about that. But ask yourself, how can I get better? That's the key. That's the key. Now, speaking of analysis, we had a great day in the live room today. Out of all the years I've been teaching the live ratio trading room, this was probably the best day we had. Now, it wasn't the biggest day of winning pips or anything like that. We didn't have a super day, but it was a real learning experience, and you can tell the light bulb went off in many of the live traders' heads. Someone shot me over the idea. They said, hey, Akil, can you take a look at dollar Swiss on the hourly? I don't think I have my analysis still up, but we'll go over to dollar Swiss. Send me over a message. Hey, Akil, can we check out a dollar Swiss on the hourly? There's a double bottom down there. It was right here. Now we've broken and closed below it at the time, but the double bottom was right here on that trade. And what I did was I said, okay, well, the right candle of our double bottom was in progress. It was about 9:42. So I said, guess what, traders? We have 18 minutes. We have 18 minutes before this candle closes. And we have to make a decision because we know with double bottoms, we always wait for the candle to close and we enter next bar market. So we have 18 minutes to make a decision. I sat back and I said, you know what? You talked about this trade. Convince me. Why should I take this double bottom? And I sat back, refilled the coffee cup. And when I came back, we had about 20 different answers shooting in. There were newer traders that are going through the 12-week transformation, going through the CTS checklist. Hey, RSI, structure, this and that. We had the older traders. Hey, ABCD, ratio confirmation. And you could just see people were excited to shoot in ideas, trying to convince me why I should trade it. And I was telling the guys, why do I do this? I don't really, we have different rules. So even if you convince me, doesn't mean I'm going to do it. I'm going to follow my rules. But the point was, if you can convince me to take this trade, guess what? You can convince yourself, right? If you're spending all the time and effort to make the point to say, Keo, this is why you should trade this, guess what you've done? You've already built the case in your mind. You've already built that confidence. So a lot of them ended up making the case. I didn't take the trade because structure down here and the whole thing about stop losses and 2 structure levels, the lowest one is usually hit. A big spiel about that, but it wasn't a bad trade. We ended up getting, I think, a CTS score of 6 out of it, which is, for most people, unless you're very conservative, way above the minimum CTS score that you need to trade. And we had about, I think, 45% of the traders in the room took the trade. We had about 35% of the traders said they were going to wait for a lower level. And then 20% were saying, hey, I'm new, I'm unsure, I'm just going to sit back and watch, which is perfectly fine. So it was pretty cool to see that. I'm not sure if these traders would have hit targets. We talked about a target level. Ooh, look at that. I think you would have, guys. If you adjusted with the fibs, I think you would have just hit target ones up here. So a nice little intraday winner for you. But it was just great to see the ideas come through. And when they realized what I was doing, when they realized I wasn't really asking them to convince me, but for them to convince themselves, they got a sense of everything we talked about last week, the CTS system and analyzing a chart and breaking it down in advance. They realized how powerful that is. Which is great. Moments like that are why, in the middle of the summer when the World Cup's on and no one's trading and it's slow, that's what keeps me waking up every morning and wanting to do this live room. Trust me, if I didn't like it, I have much, I don't want to say I have much better things to do, but I can easily find different ways to spend my day. Mainly on the golf course, trying to learn how to play golf. Especially in the summer when things are slow. So it was great to see that. What am I? I'm pretty deep in already. Let's do one more thing. Going off that concept of making predictions and building a case and convincing me or convincing yourself to take a trade. There's one more trade we broke down. It was Euro, Aussie, Canada. No, that's the trade I'm in. Man, what am I up right now? Oh, no. We're coming back. Wasn't that? It was New Zealand, Canada. New Zealand, Canada. There we go. I think, and we actually talked about this in last week's video. So if you didn't watch last week's video, go back and take a look at this. I think we actually broke this down. Now, I had a few good trades on this last week. I've been playing, when I delete all this, I've been playing this flag pattern, or this pennant pattern. We came up here, boom, the market consolidated. I had a couple plays on Friday where I made about 20 pips in the market. We opened up and retested the highs on Sunday, got short again, and made some good movement in here. And since then, we had New Zealand GDP come out 2 days ago, I think it was, either yesterday or 2 days ago. We've broken out of our pennant pattern here, right? Now, the whole time we talked about, when we're taking this trade, we talked about this structure level right here, how we didn't expect it to be the end all be all. This was a minor structure level. You can say I don't even have a DSR on here. And DSR is dynamic support and resistance, a tool that we use to kind of bring our attention to structure levels. And we talked about how this is going to be just a road bump in the market. And again, we're looking for, hey, 20 pips, 30 pips out of the market. But the real move is a little bit higher. And we did our same analysis on here. I took a look at the chart. I said, hey guys, we have a breakout of a flag pattern or a pennant pattern here. Let's go through our IDPD process, or IPDE process. Identify, predict, decide, execute. Where is the market likely to go next? And we have people saying, hey, Keel, I used to trade pennants. Usually the breakout is the same extension of the flagpole. So if we were to copy and paste this, right, we'd get up here, boom, right in our structure level. Right? We all know structure leaves clues, so we're looking at this structure level anyway as a place where the market's going to go. Now we've got structure and a harmonic move from our flag pattern, ABCD pattern, whatever you want to call it. We can also take a Fibonacci extension from our swing low to our swing high. Oh, what do you know? Look at that, 618. Want to get fancy? Let's take a Fibonacci extension inverted backwards. Let's bring in a minor Fibonacci point. What do we have there? 1414 Fibonacci right there. Building the case. We got structure, 2 Fibonacci's, ABCD pattern. I said, what do you guys think? What do you think is going to happen next? Oh, we think the market's going to continue up. So I said, okay, how about think about it this way then? Think about it this way. And a lot of the training I do is it's not the actual chart stuff. That's why I give this to you guys free. I hope you guys understand that. It's not the actual charting stuff. I do a lot of free training every week with this video on looking at a chart and analyzing it. This is the easy part. The mindset is the hardest part to get. The mindset, that's the hardest part. And that's what I try to develop every day in the live room. That's why we do the 12-week transformation. That's why it takes 12 weeks to develop that mindset. Anyway, before this turns into a training spiel, so we said, okay, IPDE, identified, predict, decide, execute. Hey guys, where do you think the market's going to go to? Oh, I think the market's going to come up here. Why? Well, because we have X, Y, and Z, everything we just laid out. So the next question, this one kind of caught them off guard. All right, so you're making a prediction that the market's going to go up there, right? So how's the market going to get up there? Well, the market's got to be long. Okay, well, the market's got to be long to get up to that level, right? It makes common sense. We can't get to that circle if the market doesn't go bullish. So how is the market likely to go bullish? And that's when it's one of two ways. The market can either A, just go straight up there, or the market could do B. We know how these pennant patterns act. We can come back, we can retest the trend line of a pennant pattern, and then spike up. So I said, let's play a little pretend game. Let's go through our analysis. Let's try to make a future prediction here. If the market already gave us a brief recovery, a brief pullback into that level, but if the market's going to come back into this pennant pattern, again, looking right here, we did it once. Is there an opportunity for us to get involved? And this is where we start going through all the different tools we learn. And there's lots of, what do we have here? Well, we've got a retest of a trend line right here. That doesn't really mean much to me. I'm not a trend line trader, but what else do we have? Well, if you're an ABCD pattern trader, you can trade an ABCD pattern down here, right? You can get some Fibonacci confluence. We can draw fib extensions and fib inversions and end up drawing a nice little kill zone. At this level, you see a 1618, and there's going to be a 1414 down there as well. We can do that. If you're an advanced pattern trader, you can look for an advanced pattern. We know how the market ebbs and flows. We can look for an advanced pattern down there and look for that pattern to complete and then trade that up. There's tons of options. And again, the tools we teach will give you those options, but it's the mindset. If you're not even thinking this far in advance, then you're already lost. And we had a trader in the room today who was saying, "Hey, Akil, but I agree with you. I think the market's going to go long, but the move has already been made." At this point in time, we were already right here. The move's already been made. Price action has already came back. It's hit the trend line. It looks like it's bouncing way up. Let's just move on to the next one. And remember, guys, there's no harm in making a prediction, right? There's no harm in making a prediction. If the market doesn't come down here and it just shoots straight up, guess what? If you're on NinjaTrader, right click, go to drawing tools, go to remove drawing objects, clean chart, you start making your next prediction. All right? So it's the mindset that matters. And that's what I want you guys to take out of this video. And before I leave you, Jason said something very interesting this morning in his war room meeting. And syndicate members, you heard this. And for you guys that aren't familiar with the war room, in our syndicate, we have something called the trade floor. On the trade floor, we have something called the war room, where Jason does a daily meeting where he discusses, he went on a rant this morning, but discusses what's on the radar for the market, maybe what's going on fundamental wise that may affect the market and all that fun stuff. And he mentioned something very interesting in today's meeting, which caught me, because my whole theme has been what? I want to turn you guys into consistently profitable traders, right? Consistently profitable traders. And what Jason said this morning is that the mission shouldn't be to create consistently profitable traders, but it should be to create independent, consistently profitable traders. Meaning that getting you guys to the point where you're not relying on me or Jason to give you signals and shoot you in ideas. I mean, that helps. It's always good to bird dog, but the key should be is for you guys to be able to do it by yourself. If one day I wake up and I just say, "Hey, I don't feel like doing a live room anymore," I want to take a vacation in Spain for a month and just put trading on the sideline or do trading on my own time and not do syndicate, not do live room for a month. I don't want Joe Smith in the room, and I apologize if there's actually a Joe Smith in the syndicate. I don't want Joe Smith having his account affected, his lifestyle affected, because I'm not there to feed him signals. I want Joe Smith to be able to take this stuff, take the education, go into the market, and do it for himself, whether I'm here or not. So making that one little change, independent, consistently profitable traders, is key. And that just really, that was really big for me. So let's get this out the way. I'm going entirely too long with this video. I think I'm up to 30 minutes right now, which I apologize for. But if you've sat with me for the whole time, it means you're getting, it means you like it and you're getting good information out of this. So we're going to call it a wrap. Lastly, I do want to thank you guys for leaving comments. I do notice that it's a lot easier. I would say this, over my experience, usually the people that like your video, they don't leave comments, and there's nothing wrong with that. They don't hit the like button. They don't leave comments. However, with people that don't like your video, they're the first ones to type in stuff and try to tear you down. And over the last 2 weeks, it's just been, I know last week in all, we got about 100 likes within the first 2 days and over 30 comments, and they were all positive, all positive. So that means that not only do you guys like it, but you guys like it enough to take the time out of your day after watching a 30-minute video to go back and write something. And that just means a lot. So I really do appreciate that from the bottom of my heart. Every time you leave a comment, every time you click the like button, especially every time you share and someone else is able to subscribe, you help me to accomplish my goal. And like I said, my goal is to help you guys and help other traders out there become independent, consistently profitable traders. So again, I always want to give my appreciation for that. And I have a lot of fun doing this. If you guys weren't liking it, I probably wouldn't have as much fun. So we're going to call it a wrap for this week. We got Japan playing someone tonight. I forgot. I just watched England lose, and I was rooting for England, and that's I feel kind of bad for you guys out there. So hats off, good effort, but it's close. Suarez strikes again. But until next time, guys, plan your trade your plan. If you want some more information about the syndicate, instead of asking me lots of questions, there's a link right under this video in the information section. Just type that before shooting me an email, because I would assume that most of the questions you have are answered on that webpage, and that saves me some email checking time. So plan your trade your plan. Good luck to you and your country in the World Cup. If you are still in it, go USA. We're taking down Ronaldo on Sunday, hopefully, or at least getting a tie. And I will see you guys in the syndicate tomorrow. I'll see you guys in the live room tomorrow. I will see the rest of you guys next week in the weekend review. Take care.